On May 28th, Nvidia, the heartbeat of the AI revolution, reports earnings. And if you're even thinking about touching tech stocks right now, you need to be watching this. So, Wall Street is bracing for monster numbers. Revenue projections sit at a staggering $43.9 billion. That's up from $30 billion a year ago. The EPS estimates are ranging from 88 cents to 93 cents compared to 67 cents last year. These aren't just growth numbers, they're AI fueled warp speed. And it isn't even overvalued. If you take a look at the trailing 12-month price to earnings, it's sitting right now at about 45, which is much lower than its previous history. It's, in fact, one of the lowest PEs that we've seen since about 2019, going all the way back here. And on top of that, that's not even really what matters. What matters the most is demand, okay? Amazon is investing $100 billion this year in CapEx, the largest in their history. Now, you also have companies like Microsoft that are also investing $80 billion as well. Google is coming in with $75 billion in CapEx spend. And finally, you also have Meta Platforms with $72 billion. Now, all these hyperscalers are spending massively, and they're using that CapEx to fuel their AI transformation, the AIization of their business, and building out their infrastructure. And if you understand the industry, you understand that Nvidia is at the absolute front of it all. Their Hopper architecture is already dominating AI training workloads, and Blackwell, Nvidia's next generation chip, is expected to scale up through 2025. Now, for this conference call, if we hear anything positive on the Blackwell ramp, this stock will rip higher. But this is also where things might get tricky. Nvidia's gross margins are expected to hit nearly 75%, and that's GAAP. Investors are pricing in perfection. Anything short of a flawless report, and the stocks could face some serious correction. But this report isn't just about Nvidia. It's about whether or not the entire AI trade has juice. Because if Nvidia beats and raises guidance again, it could ignite the next leg higher, not just in Nvidia, but also in stocks like AMD, SMCI, AVGO, and the Qs in general. Now, on the flip side, a cautious tone from Jensen Huang, especially on the hyperscaler ordering cadence or Blackwell yield, could cause a ripple effect across the entire tech sector. And expectations are actually pretty high. Last earnings season, even a blowout wasn't enough to move the stock dramatically because the market had already priced it in. However, this time the stock is looking extremely cheap at a forward PE of only 32. Now, the implied volatility after earnings here is actually set up to be about 8.4%, meaning we're likely to see a large move after hours this time. So the big question is, what do the charts say about Nvidia stock? Well, looking here at our charts, we can see that Nvidia has been a solid performer over the past couple of days, couple of weeks. We've actually seen it grow and move higher and break out of some significant resistance areas. Currently, Supertrend has it set up as a buy on the daily. Okay, if it falls below $120, that could potentially mean a sell. So if there is big news, big negative news, and the market reacts negatively after this earnings, it could actually trigger a sell. On the flip side, Nvidia is setting up right now in such a way that if this earnings is positive, then you could see it blast off, move past the resistance here at 140, and then even challenge the resistance at 150 as well. As soon as you get past this 140 resistance, there's a lot less resistance between 140 and 150, and we could actually see it move immediately up to 150 and make a new all-time high. I do think that's very possible, or immediately after the earnings. Maybe it takes a couple of days, a couple of weeks for Nvidia to ramp up higher, and we could potentially long-term down the road see 200 or even 250 in a couple of years. I think that's entirely possible. Now, looking at the RSI, it's sitting at about 67 on the daily. It's not overbought just yet, But generally speaking, when Nvidia does go above 70, it's a sign of strength and not a sign of exhaustion. You can see here back in January, it made those moves several times. Huge rallies back in January of 24, and then again in June of 24, it actually continued to move much, much higher. Nvidia's earnings will either confirm the AI supercycle or signal a cool down is coming. There is no in between. That's why this earnings is so incredibly important, as the naysayers are looking for any opportunity to tear down Nvidia stock and say the AI supercycle is over, or these hyperscalers are pulling back in that spend. And that's honestly not what I'm seeing. I'm seeing a lot of hyperscalers continue to raise their CapEx numbers and continue to build out that AI infrastructure because it is so incredibly important for their businesses. So I think that this earnings is actually going to prove a lot of the bears wrong. I'll be covering the earnings on my threads and on my X. So if you guys are interested in that, subscribe to my threads and my X as well. And let me know in the comments below what you guys think about Nvidia. Will Nvidia explode higher, or do you think that the top is in? This is Cody the Coin Raptor, signing out.